as Richard already anticipated, I'm running strategy for BNP REIM, so investment management of BNP real estate. We have roughly 25 billion AUM all over Europe, mostly on offices, but we're active across, let's say, across the whole panel, all different sectors, and mostly in Western Europe. In Holland, what we do, we basically were active as for our office, Pan-European Office Fund, and for our Pan-European Logistics Fund. These are the two, let's say, the key sectors we are looking at, although, as probably we'll discuss later, we don't despise the other ones. So we're happy with a lot of different things, but these are the two, let's say, active products we are having now. Yeah.
Okay, great. Rogier.
Yes, thank you. My name is Rogier. I started the Benelux office for Berlin Hub in 2008, in, let's say, the beginning of the financial crisis. Ever since, we have done 95% of our loans in the Netherlands for when it comes to the Benelux, and we've built up a loan book of north of 1.5 billion over the past 9 years, being very proud of that. Like every lender, we will have a magnificent year, I guess. So our shareholder seems to be fairly happy with that, and looks like we can keep on continuing that.
Great, thank you. Go ahead.
Good morning, everybody. My name is Reinoud Plantenga. I'm responsible for investment management on behalf of Triuva in the Netherlands. We've been predominantly active in the sector of offices, although this year we acquired our first logistics center in Ede in a sale and leaseback from a family office. Around Europe we have about 10 billion euro assets under management, predominantly offices, as said. In the Netherlands our portfolio is about 300 million currently. We're doing one large redevelopment in the city center of the Bloom House, a building we bought in 2015 at a significantly higher yield than the yields today, so we're very happy with that. And on the other hand, I think we were one of the largest sellers on the last few years. What Mathijs said, we have also seen that the offices in secondary markets are not wanted anymore by core investors, and we have been selling those to either private equity or private investors. That has been our activities for the last couple of years.
Okay, great, thank you. Let's start with you, Maurizio. Just in terms of, I mean, so let's take a pan-European view before we drill down a little bit further. GDP growth coming through in continental Europe, especially actually in Eastern Europe, is one of the interesting things. We've still got low interest rates with low bond yields. What are you seeing, I guess, in terms of those sort of macroeconomics? How are you seeing that playing out in Europe, and also then how do you see that for the Netherlands within that context?
Well, I would say in general terms we are not particularly worried about the general macro environment today. I mean, there are plenty of good reasons for which interest rates are going to stay low, and for some time, even after quantitative easing comes to an end. That's what we believe. Real interest rates in Europe are still negative. Perspective for inflations are, let's say, kind of stable. There will be some more inflation, but nothing really extraordinary. So I think the medium term, there is no way that interest rates are going to increase substantially. So all in all, this is very positive for real estate in Europe. In general, it's not only about Holland, but it's all the Eurozone is going to benefit of the situation. Along with some growth, what you were saying, there is GDP growth, and of course you got countries that are doing better, countries that are doing a bit less good than others. But in general, the cycle that we are seeing today is much more subdued compared to previous cycles, which means that it's less exciting, which means also less rental growth in general. You got markets that structurally have more vacancy than before, but on the other hand, you have a much less new supply, which is supporting the market. So I would say the cycle is going to be, let's say, less volatile compared to the past. Lower interest rates, returns that are going to be probably less exciting than before, that's for sure, because we had a couple of very, very good years anyway, but still quite positive. And don't forget that on top of that, you got all the money coming from other parts of the globe, especially Asia, that is going to support the market, also with higher allocations to real estate, mostly for, let's say, for most institutions, pension funds, sovereign funds, all these kind of investors that are going to put money generally in real assets, where real estate, of course, is that's the most important part of it. So on this side, I would say it's fine. Specific about Holland, what I would say, there are two components that are interesting to me. One is cyclical, because when you look at the perspective, let's say over the next 5 years, typical forecast, you look at GDP growth, you see that the Netherlands is going to outperform most of the European countries. So there is a very good dynamics from all the components, from trade, from investment, for generally all the parts of the economy. Holland should perform quite well. So this is a cyclical component. But what is most important for me is actually because obviously we have funds that have a longer span than 5 years. We also have open-ended funds. We have a much longer perspective, and it's the structural components of the economy. When you look at drivers, let's say the drivers of long-term growth, and there is a set of indicators coming from United Nations, the World Bank, all these kind of institutions. They just look at why countries grow, and there are, let's say, long-term reasons for this. You name it, like technology, adoption of technology, innovation, the rule of law, institutions, so the strength of institutions. Then you get education, training system, the infrastructures, investment in infrastructures. Holland is one of the countries that at global level actually outperform most of the others. So you will see always there Switzerland, Singapore, and the Netherlands. In most statistics, they say really doing well. So this means that in the long run, you should have enough reasons to invest in a country where a country that's supposed to outperform. Yeah, so this is the main, I would say, the main reason. The only drawback that I would say, but this is of course, it's something that it may change in the future, is let's say more rigid labor market compared to other markets, let's say to other countries. Debatable, but that's, I would say, the only spot where Holland is not perfect.
Okay, good.
Put it this way.
Well, that's not bad. Only one thing, is it? I mean, that's, we can live with that. Reinoud, from your perspective, I mean, Maurizio just mentioned a little bit there some of the market fundamentals. How do you see that, and how are the investors, I suppose, that you're representing also seeing that when they're looking at the Dutch markets or the Benelux markets?
I think one thing that worries me, but also our investors, is the enormous yield compression, although that some of this compression is done because of the speculatively, because of the fact that the market rent might be higher than the current rent paid. Our investors have also, to their pension funds that are behind, they need a certain return, and if this return gets lower and lower, it's questionable if real estate in the core markets are still affordable for us, because we are a cash-on-cash player. Long term, as Maurizio also said, we were a long-term investor. So that's one thing. So I think some parts of the city are becoming too expensive. And what happens then, I don't say that we are doing that, but I see that with other investors, that the investment criteria are becoming softer. So at first people say we only want 10-year offices that are 10-year leased and freehold, but today we accept 5 years leasehold with an annual installment that has been paid off for the remainder period of 20 years. And that worries me, because those kind of assets, if these are bought at 4 or 4.5%, those will be the bleeders in the next cycle, when the economy goes down again. So looking at that, we are a bit reluctant to enter into these kind of investments at the moment, and that might be a possibility to look in other cities where the yields are relatively higher, but that's also the risk premium, of course, there you get. So all in all, I think Amsterdam is at the moment for most German investors a bit too expensive because of the fact that we're on cash on cash player.
Okay, good. And Rogier, in terms of you're obviously in the lending market, so you've also got to pick up things that both Maurizio there and Reinoud, and actually Mathijs as well, picked up, which is that you've got yields, pricing is getting higher. Do you see that continuing? Do you think that's backed up by rental fundamentals? Because obviously as a bank you've got to get that through your committees as well to see, should I lend on these things? What's your view on that? Is it getting more difficult for Amsterdam at some of the pricing?
It becomes actually a bit easier. When we had these discussions a year ago, we could only say that the growth is driven by lower yields. In the meanwhile, it is reasonable to expect also some rent growth. And it is normal that the yields go in front of growing rents. So there is some comfort in there. It is also good to see. I mean, there's actually only one big disadvantage about the Netherlands, and that it's a very small country. I will never forget. I think in 2009 or 10, we opened up our offices in Paris, and I was inquiring why Parisian investors were not investing in the Netherlands, and they had two reasons for that. It's boring and it's too small. Well, we didn't get any bigger in the meanwhile, but the fact that it's boring is actually an indication for me that it's also a very stable market. So what you have is relatively low yields in a stable market with a very low unemployment rate, which is going to be decreasing next year as well. So it's actually a safe haven as long as you can find the right product. When it comes to the office market that also Mathijs described, and which has been bought by private equity, we have been trying to find the borderline between core plus and secondary. And this is where you can still make a good yield without a significant risk. And as a lender, we support that. We would not go secondary, but try to find yield in either quality or core plus assets.
I mean, and I remember doing sessions here, but also in London, where the Dutch market was being talked about as just under-demolished sections of it. I mean, literally, that was the description of it, is that the office market in the Netherlands is under-demolished. There needs to be some more green open spaces and some of it. But that position now seems to have changed. But do you also buy into, I mean, Mathijs was saying that actually some of these secondary offices are still difficult to sell. And are they the kind of things that you would still not lend on, for example?
Absolutely. We have at the moment a very large investment volume. We have had discussions also amongst lenders. So what is that? What does that volume consist of? And especially when it comes to loan sales, a big chunk of secondary offices are involved. And these are indeed very hard financeable, and might have to be demolished indeed, unless they can be redeveloped for other purposes, which you can do in an area like Amsterdam, but not in Greenfield in the middle of nowhere.
Okay, good. So far, all very positive. We've only had one potential issue. Let's look broadly at some of the bigger macro picture for Europe as a whole, and obviously other things. But last year, particularly when we were looking at this, political risk was one of the very biggest things. The Dutch elections, but the French elections, the German elections, a lot of things happening, Brexit happening as well, all of those things happening. What's your sense of that now? Do you think that the market has kind of adjusted to the amount of political risk there is? And are there anything that you're expecting that will keep you awake at night in 2018?
Politically not. The Netherlands are used to form coalitions, unlike Germany these days. So at the end, you have to find a coalition. I've never been nervous about the elections of this year's March, where you could clearly see that there was indeed some interest from the extreme right wing. However, this could never happen without the coalition. So before any elections, what we have is a lot of discussion, a lot of political statements, and in the end, after forming coalition, we end up somewhere in the middle. And I expect that to happen at the next elections in 4 years as well.
Okay, good. I mean, one thing I asked both in France and Germany because it entertained me to do it.
But I think, to be honest, all this thing of political risk sometimes is really exaggerated. I mean, coming originally from a country that had 70 years of republics and 70 governments, probably. So I would say that economic policy has not really changed. And when you have elections, on the wake of elections, you have much more volatility. Then things settle down quite quickly. I mean, if it's, when many people talk about changing things before the elections, but reality, when they rule the country, they tend to actually do what the guys before were doing. So unless you get more, let's say, more structural events like Brexit, and we don't know, of course, what the consequences will be. But I think we just have there is too much hype on and sometimes we forget the real economic cycle. But that's what creates unemployment and employment.
And in terms of things like, like we have situations like North Korea, but if this was last year, everybody would have been discussing that as a potential issue. We've had Turkey gone completely mad. There's all kinds of things happening, but now we don't seem to worry less about that. Is that because there's less worries, or that actually the market is so busy and we don't think that's going to impact on it?
I think normally you see when something like North Korea happens, you see an impact on the stock market that decreases. But the thing with real estate, if you own the assets, you cannot easily sell them the next day, so you do not see the impact yet. And I think it is always a temporary thing, and that's picked up later on. And as you said, it these things will drive much more money, even more to Europe, because we are seen as such a safe haven, and that's also basically the case why South Koreans are so very much invested in Europe at the moment, because they don't want to invest in their own country. They don't like Japan, so they have to go to Europe, and that's basically where they're heading towards.
That's an interesting point. And Mathijs, from you showed the slide there, obviously, in terms of the flows of capital, and Reinoud there mentioned South Korean capital. Are you seeing new different types of capital? Obviously, at this point last year as well, there was an expectation of a wave of Japanese money that hasn't quite come through yet. But are there new sources of capital that particularly you're beginning to see coming into the Dutch market?
Yes, we do. But all the Korean money is behind the investment managers. And so they are holding the mandates, so you don't actually see a lot of new investors. We see the investors sometimes in presentations because of their knowledge of the Dutch market, but you don't see them actually as your clients, because and that's always, of course, that goes for worldwide. Asset and investment managers are the traders to me, and what we see is that, for instance, if you want to sell properties here in Amsterdam, everybody wants, on the sell side, be trading with secured money on the other side. So they want to know up front, do you have the money secured, is the mandate secured, is it everything being arranged? Because if you're coming in with Koreans work bottom up. So, and that's very hard to deal with. So you have to, the trading time will take you, let's say, not a couple of months, as we are used to with UK, US buyers or Germans, but it will take you months and months, and because they're really working their way up, and then when they close the guard, then there's a decision made, and and that's of course what we don't expect. We want to know up front if the price is agreed in the board, and then the transaction is secured.
Would that also be the reason that the Amundi with Korean money is picking up these large volumes, because they are complicated anyways?
It is. Yeah, it is.
I can briefly elaborate on that. My name is Peter Jensema. I'm working at Greenberg Florida. I was heading the transaction team from a legal perspective in the Amundi Korean transaction for this building. So we have seen the whole show from the sales side, starting in October 16 and final completion in October 17. And I cannot tell too much about how things went, but I know that what you said, Mathijs, regarding off-market opportunities, that would certainly lead to a further inflow from Korean money, because timing, as envisaged in on-market transactions, typically do not match with the expectations from Korea. And what we achieved in this transaction is that we had certain milestones in the transaction. Maybe you know about it from your colleagues from DTZ who joined your firm. Certain milestones, certain steps where the Koreans had to agree on certain decisions with a let's say breakup penalty or fee to be paid to the other joint venture. So it is workable, but the compliance from Korean perspective is extremely difficult. And what I said, it doesn't typically match with on-market transactions with stricter timelines. It takes at least double times what we normally use in other transactions, at least.
Maybe a question to Michel. Michel Willem of Cushman, he was one of the leaders in the...
We were both in the same team.
Yeah. Sorry, Michel, I didn't see you yet. But,
Sorry?
Did you count the numbers of pictures taken?
Well, there were a lot of Koreans coming over to the Netherlands, and it's not only from the Merits entity, but also with other Koreans coming in the consortium, so to say. And if you talk about pictures, sometimes they had to show that they were really here in Amsterdam. So every time I had to take a picture with a Korean for a building on the south axis. So that's also correct.
Richard, what I liked about this year is, and it's also a sign of stability, is that we have actually seen investors from everywhere. The transaction that we have been involved in 2017, the equity partners, investors came from the US, from the Middle East, from Germany, from the Netherlands obviously, and that minimizes the risk of demand falling away in case something political might happen in the future.
Okay, good. Thank you, and thank you for your contributions there as well. I wanted to pick up.
If I may, because I completely agree with the previous speaker on timing, especially for Korean mandates, and that's what we are facing at this moment. What I don't see with the agents, and I'm very interested in your comments, Mathijs, is how do the agents and the investors who are selling adapt to the fact that there are investors looking for large tickets, but just don't have the time on their side to react in a normal market condition. So getting an LOI out in 3 weeks, 4 weeks, that is a problem on timing, but I don't see any adjustment in the sales process.
No, we don't see that. And I think because the market is so hot, and of course, if you would have a very slow market, you see that sellers are adjusting their processes. They're willing to do off-market transactions, and now once the decision has been taken, we as agents, we have to pitch with 3 or 4 in competition, and everybody will tell them that within a couple of weeks or months the transaction will be closed. So everybody is looking for the top of the iceberg, and it doesn't say that there are not other investors that could pay more maybe, but need more time. So what we do is of course we adjust in the processes, we make it as comfortable as possible with a lot of preparation. So a lot of vendor due diligence work is done, and I can tell you in every pitch a vendor will tell us, no, we have everything in place, don't you worry, within 3 weeks you can go to the market. I can say 99% of all the investors have not things in place as we like it. So we have to add a lot of work to get it really in place and to get it ready for expectations from foreign investors, because they like more and more and more information. So that fact goes wider and wider. But one thing is sure: once you go to the market, you want to complete the transaction when the offers are in. So you don't take the risk of the highest bidder to be uncertain with a lot of execution risk. And for instance, we're now selling the mast tower on behalf of North Star. I think last year, 50 months ago, we tried it. Market was completely different. At 7.15 gross initial yield, we hardly could find any 1-2 buyers, but with terms and conditions attached that we were not interested in. So what we did is we took it back from the market, re-geared the leases with the tenants, brought it back to the market recently, and we're now roughly around 5.5%. So within 12 months. So that was a very successful decision. But because of the volume, roughly around 160 million, you have to run a total different process. And what is also quite new, and we saw that really in the past, in 2007 and before, but investors are now willing to go not exclusive, but with the two of them on an exclusive base into due diligence. So that's an ideal situation, of course, from the sales side, because they're running parallel towards the finish, and then providing you with an unconditional offer, and you can choose. And sometimes there is a minimum remuneration for the one that loses, and he gets a couple of 100K for reimbursements. So.
Okay, good. I wanted to pick up one of the things, just as a broader trend that came up in both in Paris and also in Frankfurt, actually, which is technology and what's happening with there, whether that's the sharing economy, whether it's artificial intelligence, driverless vehicles. I noted this morning on the news that I was watching that Tokyo is going to have, starting in March next year, is going to have a fleet of driverless taxis beginning testing. So things moving much quicker actually than I think we expected. And Femco is going to discuss a little bit about that. But Hein, I wonder if you could just give a brief of how that's influencing or impacting on what you're doing as a lawyer.
Well, what we are doing as a law firm, we saw the past years that blockchain will become important also on our work and our role as a law firm. So we decided to join the Dutch Blockchain Coalition, which was established by the Dutch government and the University of Delft and other members like us, because we think in the coming, let's say, 5 to 10 years, this will have a large impact on real estate transaction and also on the law firm work. For instance, because Femke was in the panel, she's a notary, but we think that a notary is securing a transaction, but that can be made technical, so that the notary is does not play that role anymore in the future. Maybe to check the deal from a distance, but not being active anymore, because everything will be, let's say, mechanical. And also a broker providing information about the transaction. That information can be uploaded into blockchain, and therefore you can make a transaction mechanical without having all those players active in a transaction. And for me, as a lawyer, because a lawyer is more negotiating on the deal and also on the terms of the deal, I think that role will stay. But on the other hand, lots of contracts we have now are standard contracts. So we also established, Reinier, the program we train people.
The Legal Tech Academy.
The Legal Tech Academy, that's the word I was looking for. So we train our younger people to work with those kind of contracts, and also learning them a little bit the skills of programming, because we think lawyers in the future are more moving to tech people. Of course, they are still lawyers, but this is a development we see, and therefore we joined that blockchain coalition and this legal tech academy we established now within CMS. Yeah.
Okay, good. Thank you. I mean, interestingly, I did a session in Prague. For the first time this year, we've done 3 sessions on innovation and tech at various places around Europe. But I was also moderating one that P3, the logistics company, were doing in Prague about 3 weeks ago, where they've got quite a few guys flown over from the States talking about the innovation, particularly in terms of voice, the kinds of things that you're using on your phone now. Instead of typing, you're using voice, and just how rapidly that was all moving. So that yes, there were difficulties with the first one, but then by the time you'd reboot, you'd done a next software upgrade, suddenly you could expand things quite rapidly. We have Marika Post here from who's a partner at PropertyTV NL. Maybe just pick up a little bit, if you could, for us on some of the things that you think might be influencing the real estate side, perhaps for next year, and what we should be thinking about.
What I think is very interesting is that the value chain is totally changing. So it's not so much a linear process anymore, but more an integrated value chain with a much more focus on the end user experience. And what I'm really interested in is how technology changes the insights in the overall performance of a real estate object. And I'm not really knowledgeable on the investor's perspective. So I'm very much interested in how the increased insights in the overall performance of property impacts the consideration of investors, and how they expect this will affect the property's value. So that is a question that I have to the panel. So how will you see that, for instance, blockchain as well will give a lot of insights in the performance of an object, and I'm very much interested in how that impacts the investor's perspective.
I think first of all it would make life easier, because we're now connecting all sorts of data from different sources. You have your technical data, you have your legal data, you have your financial data, and you want to see the performance of a property. So that will work. What worries me is the part of compliance, know your customer, and if the people behind are really the people that are whom they say they are. You of course have your digital IDs and everything that could work. But what I was thinking about just now is for you, Rogier. You have mortgages that pass by a notary. Do you think that is a necessity, or do you really trust or need the trust from the notary that it's all worked well, or do you trust the IT?
Yeah, it's a good one. It remains people's business. So, and if you want to reduce the risk of mistakes, then you should indeed automate deeds even further, because it should lead to less mistakes, and people seem to make more mistakes than computers. But in the end, we will always want to see who is behind a transaction. And we are heavily investing the automation of our processes. If you would ask it to our CEO, he will tell you that we are basically an IT company financing real estate, and so that is in focus and should mainly lead to a higher client satisfactory rate. But we are still, for example, witnessing all the signings that we are having in person, and we still want to see who is in the end behind the transaction.
I think, Mathijs, you mentioned that if you're on the sales side, the seller says, okay, I have everything ready, here's my data room, and then you start doing your first, let's say, vendor DD, and say, oh, we're missing these kind of documents, we need that and that. Do you think blockchain will help you?
Yeah, I really do think so. If you see in 2000, I suppose, let's say 2005, we had an investment agent team of 5-6 people, we now have an investment team of 43 people, but we're not that profitable. So we need more people to do the same kind of work and to make the same kind of profit. And that is a lot of checking work to be done. So a lot of preparation work, not what Hein is saying. I really believe in deal making. So you need people to connect and really to transact and make the deal and convince people why they should do things. And so for that kind of advisory, there is still plenty of room, but another part will disappear. And I think that technology will and blockchain will be a very big disruptor also for the valuers of properties. We now have 130 valuers, and in 10 years' time, I don't know what the number will be, but I suppose it's less than 50%.
From my point of view, I'm not an expert in blockchain. I'm not an expert on.
Actually, we should go away from blockchain and focus on distributed ledger technology, because that is what is actually at the core. Blockchain is just a brand, more to speak, or a technology approach, but it is about distributed ledger technology.
This is even more difficult for me, actually. But
blockchain is just one of the many distributed ledger technologies there are.
For now, Marika, we will use blockchain, but we'll accept that other options are available.
Yeah, but on a general point of view, because you see all the kind of innovation from whatever you said, and but blockchain to the driverless taxis that Richard was mentioning to. And the thing is that, from my point of view, let's say as a manager, but I would be an investor, is what are the implications for real estate demand and supply, and how this is good? Because eventually, what is going to happen is, I'm looking at the perspective for rental growth, or perspective for, let's say, yield compression or decompression, maybe, and this is driven generally by the fundamentals. Now, what we are seeing, of course, everybody has seen the change in the logistics market, let's say. But this is quite evident, and the implication for the retail market. But when you look at the market, like the most important one, well, let's say more than 50% of the transactions are in the office market, generally worldwide. So what are the real implications? Because we have seen it with teleworking before, and people still have their desks, let's say, but even in London. We're seeing a lot of kind of pseudo innovations. Now today we're again talking about the flex office, about all these kind of things. What kind of implications we're going to have? Because from my point of view, when I look at the perspective for employment, and I see the historical, but also the forecast for employment in offices, office-based employment is going up everywhere, and is expected to go up. I would say where? Why? Because it's not the state driving, of course, it's not finance, but it's generally a demand for business services, where you get the business services that are, let's say, the old school business services, or it's the new business services that are kind of linked to the TMT sector. You know, it's a bit technological, but it's also professional advice, and it's very difficult to disentangle the two things. But there is actually demand for this kind of professions. So when you look at, say, you make a specific discussion about valuers, and maybe there will be less demand for valuers, but possibly there will be more demand for another type of profession that is still uses offices. What I'm saying, to me, what is important is the aggregate picture. So if I see that there is a trend still for employment growth, I can only deduct that technology is actually helping me to raise productivity, but this actually will eventually will generate employment, and as an investor, I'm happy. This is what I'm saying. It's very difficult for me now, of course, to see which innovation will be successful and which one will not be. Because when you are at the beginning of the technological cycles, you know, something's going to fail, something's going to do very, very well. That's what I'm saying. But it's, for us, it's really the total picture that is important. So the main drivers. And so offices was a typical example where we don't really know how technology is going to make an impact eventually, let's say in 10, 20 years.
And what do you expect, you personally?
What I expect personally, as I said, if I have to rely on the forecasts based on what different drivers of demand, we still see that there will be need for offices. Still need for offices. Probably less than before, let's say. We're not expecting a boom, but there will be still a lot of demand as the jobs migrate from other sectors to office space.
How would you say the intelligence of an office building impacts its valuation?
How the intelligence of a building will impact the valuation?
In terms of how the intelligence of a property might impact the exploitation?
I would say that probably people today require more intelligent buildings, they will have more value than others, that's for sure.
Yeah.
You would make a parallel also with green buildings.
But is that something that is already taken in account now when you evaluate a building?
Does, for example, the Edge in Amsterdam achieve a higher price than a similar size building simply because it's the smartest building that's currently
I'm not a valuer, but I would say that is not fully incorporated. No, I don't think so.
Whereas green, you would say, is because it's very difficult to let
up to
a non-green building.
Up to a point. Green is just happening, and it will be happening because eventually we will be obliged to be green anyway. So you can see already the trend, and it will be actually become something legal.
And Roger, is that also in terms of financing? Are you looking more favourably at things like sustainable green office buildings or buildings generally, as opposed to non-green buildings? What is there a view?
The intelligence of a building also impacts its greenness.
Ja,
Ik weet niet wat een netto aanvangsrendement in Engels is.
yield.
Net yield.
Net yield.
Yeah, to pick up both things. I mean, technology has an impact on the management of the building.
Yeah,
I mean, in the end, a well-managed building is comparable to a good hotel. It also makes it more volatile because the value is partially depending on the quality of the management, and therefore also becoming dependent of the quality of the IT. So it should lead to a higher value, but also to more volatility. But indeed, to answer your question, Richard, in the meanwhile, a green building is mandatory in the Netherlands. In 2023, I think all office buildings should have a label C or better, and in 2030 B or better, which means for us that if we finance buildings, office buildings that are not at that level yet, that there is an obligation for the investor to get it there latest in 2022. Simply because it becomes unrelatable after that year. That's one thing. The other thing is that since a couple of years we are issuing green bonds, which are in very strong demand. Our institutional investors are looking for green investments that they can get by investing in our green mortgage-covered bonds. The criteria in there are very strict, so they know that they are investing green. And in the meanwhile, we have issued, I don't know the exact number, but between 1.5 and 2 billion in green mortgage-covered bonds, which are oversubscribed at any issuance. So it is mandatory.
Okay, good. And Reinoud, just to pick up one thing for me, which is things like WeWork. I know there's WeWork in Amsterdam. Do you see that as a disruptor or as a positive thing in terms of providing, renting space essentially?
I think it's a good sign because, as I said earlier, we are a cash-driven player, and in this, basically, it's the same as a hotel. WeWork, but they only offer office space or Regis, you have other brands as well. They can offer us a long-term rental income because they want to have a long-term lease contract, and the building itself is very flexible. So there's a lot of tenants going in and out, but we have our secure income. The bank gets their security with the long loan due to the long lease. So that helps a lot. I want to say about the technology. I think if you replace things in a building, the building becomes smarter and better, and the equipment you get, you put in is always better than the previous one, and also more green. It gives you a lot of data, but I do think that a few other things will remain very important. Is the location of the property, and in the end, the price is set by supply and demand. And when you saw the Edge building being sold, I think 2014, it was at a yield of 6.25. At that time, one of the best buildings in Europe, no doubt about it, a very smart building. But it was not trading better than a building in Paris, which was maybe a very low efficiency on energy. But there was a lot of demand at the point in time in Paris, and that's why the yield was paid there at a lower rate than Amsterdam. So yes, it has its implications, and I do think that we become much more aware of these kind of things, and it gives you also a lot of much more information and data. We love data, so that's very good about it. And I think also it creates other jobs and specialties, and also changes the occupiers of office space.
Yeah, it might impact the market demand and the market expectations, you would say.
Yeah.
Yeah.
Good. Bit of a quick fire one now, because we're running out of time, and I know some people have got meetings to go to, so I'm going to try and fly through this next little bit. Has anybody got a question quickly? Any quick fire questions from you guys? Yes.
I guess not a single discussion goes about Brexit, and there's a lot of debate now going on which cities are likely to benefit from UK leaving the European Union. What do you think is kind of which cities will likely to get better off, and let's say Netherlands and Amsterdam in particular?
Good point, because Amsterdam obviously picked up the European Medicines Agency, and Paris was delighted to pick up the European Banking Agency against Milan. No. Let's take that from yours, because what's your sense overall of how Amsterdam pictures in that? Who will be the winners from Brexit?
Let's say, put it this way, we still pick Frankfurt and Paris as the major favorites of a possible Brexit exodus. Possible, still again debatable, depends on what kind of form of Brexit we don't get there. But simply because, anyway, for different reasons, but Germany and France also have a political, if you want, a political economic weight, let's say, to attract companies. And apart from that, there are very good reasons for Frankfurt and very good reasons for Paris. Apart from these two cities, I would say Amsterdam, I'm going to be flattering, because Amsterdam is my favorite city after them. And, simply because there are many pluses, like excellent infrastructure system. Maybe who lives in Amsterdam does not judge it like that, but from a pan-European point of view, it's great. And the use of English, I mean, you can use English pretty much everywhere. Well, in Paris it's slightly more problematic, you could say. Good quality of life, and generally, and I would say that one very good point, let's say for offices, for example, is that it's very affordable compared to other cities. Yeah, so you would understand why there are good reasons for many companies to move to Amsterdam. That's for sure. It's quite central as well. You got a very good airport, so it's one of the places that for sure in pole position. No doubt about that.
Okay, good. Quickly, Rogier, from you, just in terms of the financing, what are you seeing in terms? What do you expect in terms of loan to values, availability of finance? Do you see any major changes over 2018?
Changes, perhaps not. The financing market at the moment is a bit like the investors market. It's very diverse, and I think that it's going to stay like that the next year as well. LTVs won't change, values will change. So in the end, the lenders will go slightly higher up into the risk profile. But it's very much looks like the market in 18 is going to look like the market in 17, and that also applies for financing.
Okay, good. One thing also, actually for Reinoud and Maurizio, I mean, Matthias mentioned the move towards alternatives, and actually that featured quite a lot in both Paris and Frankfurt. Do either of you see that as, do you see that as a sign of those particular asset classes maturing closer to like a US model for senior living and for healthcare and things like that, or is it just a sign of a bit of a bubble, that it's very difficult to invest elsewhere and therefore investors for hunting for yield are being forced into these sectors that they actually don't know much about?
I'm more of the opinion of the latter, because if you're searching for return and you have investors that need a return of 6% or something like that in that range, they will definitely go into an alternative investment, data rooms and all those kind of things, or student housing, hospitals. There's always a need for money in those areas, but it's you also need to be, as an investment manager, you need to be a specialist in that angle, and that's what our investors demand. So if we would enter into, let's say, healthcare, we need to have specialists in our office that know about healthcare real estate. We will not do that if we do not have those special people, and our investors will not do that. I do think it is a trend. For example, student housing in Amsterdam. No doubt that's a no-brainer, because that has always been a problem as a student to find housing in Amsterdam, and students will always come to Amsterdam. I do not have doubt about that. But let's say in the green farmland, the student housing, I would say no. Yeah, without any infrastructure and availability of that. Data, I think. The technology is getting smaller and smaller, so but it's also a very so the machines are getting smaller and smaller, but there's still a growth, I think, in data rooms, data centers. So, but also you need to have the special knowledge about that. Then it's also up to what's the alternative use. Against student housing, you can. 2 student rooms you can make 1 apartment of, and with data room or data centers, there's a lot of investments done in the technology, which are not needed for logistics, and to change it into hotel, I don't see that happening, and you fully need to demolish it, and then it's the question if you can achieve the rental price that's currently being paid for a data center.
Okay, good. I've got. Did you want to pick that up, Rogier?
Yeah, as a lender, we like specialized asset managers. But we don't do asset management ourselves, so we like to diversify. And if you look outside, you can basically invest in any assets that you see here, as long as you pay the right price and if the management is done right. But I think to answer your question precisely, it's a mix of both. It's both getting the markets more mature and there's more demand. But we like parking, for example. Jarko's here. We like to finance them as well, as long as they're well managed and owned by someone who understands the business.
Okay, good. Yeah,
I'd say for sure there is an element of crowding out for investors that actually look for, they just have to go for alternatives because of reasons just mentioned. But I wouldn't use the word bubble. The word bubble, in a sense, is quite negative, because it's obviously preconizing a bad event happening. So it's just one thing. Don't forget that, let's say, in I think 30 years from now, at least a quarter of the European population will be over 65. This is a fact. Demography is just something that you cannot change, and the demand for new jobs is mostly in the healthcare sector, and there will be. That's what. So you cannot ignore this, and as a fact. So demand.
That's just made me feel really miserable about how old I am. So now let's wrap this on a kind of slightly positive note. So let's imagine that Sinterklaas last night brought me a massive cheque that I'm going to give to you to invest on my behalf or on behalf of everybody else here. Let's do a quick. Where would you invest? Let's start with you, Mathijs. Where do you think are the most opportunities? Are you going to pay me for that advice?
Definitely.
Yeah? Definitely.
Because we don't give that for free, of course.
You'll find a massive case of money just in the next door office. I'll show it you after you've given your answer.
Very good, very good. No, we strongly believe in healthcare, and we now have 6 people dedicated in our team on healthcare, and we will expand that rapidly. So that will be, and that is an investment in the future, because it's not next year or the year after, but it will come, and then you need to be ready. And we have seen players on the market and saying, okay, but I will act when the market is there or when everything is happening, and then I think you're too late. So you have to invest the same as we do in technology. We are in all kinds of panels, all kinds of teams for technology. We know that there is a lot of disruptive material out there, and I think that you have to embrace it and not to look away, because otherwise you're gone as a big company. But I think for the Netherlands, I would heavily invest in resi. I would heavily invest in senior living and healthcare. That would be my case.
Okay, great. Maurizio.
Depending on the size of your check, of course. I would say just one thing: diversify, diversify, diversify. That's it.
Okay. I hope my check isn't small and boring. That's the main thing,
Exactly.
Roger.
No, it has to be big, and if it's really big and if you're really old, then it would indeed have to be resi. It's simply it's actually the only asset class where there are no stories behind it. It's really positive only. If it's a bit smaller and you need to still add value, then I would invest in good quality office buildings in let's say the top 20 cities outside Amsterdam. We see now massive capital being deployed here in Amsterdam, but the oversupply which is still there outside Amsterdam in some cases is often quality driven, and in the coming years you will see that demand will move to that areas, but there's no quality. So I would invest there.
Okay, good. Reinoud.
That was what I was about to say as well. Thank you that you share my viewpoint. No, I would definitely look for offices in Amsterdam and residential, no doubt about that. But I would also not forget about the other cities that we have in our country, and especially in the Randstad area, because Rotterdam, Utrecht, The Hague and Amsterdam, they're very well connected to each other, and basically they're all 20 to 40 minutes drive or by public transport away from each other. So it's in surface it's not a very large area, and even smaller than London or the Ruhrgebiet. So I think those cities will, and we've seen the benefits already in the yield compression in these cities, and I think a lot of money will flow into outside of Amsterdam as well. Also because of the fact that there's hardly any product available.
Okay, good. Thank you.